Philip Stoughton. I'm here with Shawn DuBravac from IPC. Welcome to EMS and The Economist. Shawn, great to see you again. How are you going?
Good. It's good to see you, Phil.
Interesting times. I wanted to start with the jitters in the stock market kind of over last weekend and what we saw. Um, I was kind of curious when I saw it because the tech stocks have been really high and they've been going up and up and up. And there's always a cycle of people taking profit and selling off. And I was curious how much of it was that, how much of it was concern over, specific numbers. I think Amazon failed to meet expectations. A lot of others met and exceeded expectations. And it seems to have bounced back as we've gone through the week. What's your take on that?
Yeah, I think a number of factors drove the sell-off that we saw that started obviously on the Friday before the weekend and then carried on into
Hmm.
the Monday. You had a massive sell-off in Japan. Some of that looks like it was probably tied to a yen carry trade where you're borrowing in yen and buying assets elsewhere. And so as
Hmm.
those unwound, you had a sell-off. I think broadly it was a repricing of risk. If you looked at any measure of volatility, if you look at the VIX index, for example, it was extremely low. And this is something I've been questioning quite heavily in recent months because you look at the world and it doesn't feel like a risk-free environment. You've got a hot war in
No.
Europe, you've got a hot war in the Middle East that is getting progressively worse before it gets better. You've got tensions throughout Asia, and then behind that you have a broadly slowing U.S. economy, which has been the bellwether for the global economy. So overall, the global economy is still
Hmm.
holding up pretty well, but certainly one of the bigger markets and the market that has helped lead some of that growth and done better than expected was the U.S. market. And so you have that slowing. So in the face of all of these uncertainties, you still had very low measures of volatility, which is are generally our proxy for
Hmm.
risk. And so that corrected immediately. We saw, volatility shoot up on Monday, and volatility doesn't just drop back. So volatility will recede to to the middle ground, but it will
Hmm.
it will revert to the mean, but that will take time. And so I think some of the volatility that we saw this week is just a residual of that initial repricing of risk, and clearly one of the matches that helped light this off was the unemployment report, which was a little bit
Yeah.
weaker than anticipated. Overall, wasn't a bad report, but it was certainly weaker than we've been seeing. It was weaker than expected. We did see
Hmm.
unemployment tick up, and I think more broadly just caused everyone to recognize, hey, maybe the risk of a recession in the U.S. isn't off the table. We've been talking like it wasn't going to happen and that a soft landing was a foregone conclusion, and maybe that's not off the table. And so there was a broad repricing. Now I think the markets are looking for news in everything. They're looking
Yeah.
at every bit of data that they can get and trying to decipher whether this is good news or bad news. This week we saw unemployment claims did a little bit better than expected, and the market rallied on that.
Yeah.
Normally this is a pretty volatile number. We get it every week. It changes week to week, and we saw the markets rally on that because I think they saw in it a glimmer of hope. So I do think that we've seen a repricing of risk, and I think that's going to stay. I think the next 90 days, certainly through the U.S. election, is going to
Yeah.
be a very volatile time.
Yeah. I want to get onto politics a little bit later, and we'll do a bit of a deep dive into the impact that has on the industry. But one of the big things we saw during the weekend and early into Monday and Tuesday was some tech sell-offs, and they kind of seem to be hitting the headlines. Is that just because those kind of big five, big six companies are the biggest companies on the market in the US? Is that why they hit the headlines? Because they're all doing pretty well. They have very, very high multiple valuations, which is like, okay, can that continue? And there were a couple of big sales like Berkshire Hathaway. selling a chunk of Apple stock, which is kind of the modus operandi of Warren Buffett anyway, so not unexpected. How do you see that relationship between tech stock and what's really going on in the tech and manufacturing sector?
I think there too, there's been a couple of factors. We've had a big run up in the market broadly, but certainly
Mm,
in some of those big tech names. Consider Nvidia, which started the year, around $50 a share. We got as high as, 120 on a split adjusted basis, and then you saw a sell off. So it came down, dropped, 20-30%. So
mm,
but it's still double what it was at the beginning of the year. So
yeah,
you've seen a really strong rally. I think a lot of this was investors taking money off the table. August is a weird
yeah,
time too. You've got a lot of people on vacation, and so markets can behave
mm,
in kind of fits and starts in August, because if you start to get a sell off where you might get buyers stepping in and providing some of that liquidity, they weren't there, and so you just have more pronounced moves. I think some of it is taking money off the table. I think some of it
yeah,
is, concerns of continuing to grow revenue. That's always a headwind that all of
yeah,
those big companies face. They are very big companies. I mean, you
mm,
take, for example, Alphabet, which in the last quarter earned $1 billion in just interest. That's
yeah,
more money, and they earned more in interest than Starbucks earns in revenue. They earn more
yeah,
money in interest than Target earns in revenue. So you've got some very big companies that have some headwinds.
yeah,
There's some antitrust concerns there.
yeah,
You're
there is
not sure
that.
how some of those things will play out. So and I think it's just the just general unease that's set in around the market, and people decided to take a little money off the table.
Yeah, yeah, and I think you're right. When you're heading off on vacation, maybe if you're not going to keep an eye on the market, cash is the safest place. But and I think also the cost of money and the availability of a good cash rate actually makes that a more attractive safe haven. So I think there's a bit of that. There's a whole bunch of data come out within the industry over the last week or so. Obviously, the book to bills. And data have come out from IPC on the EMS and the PCB industry. We've seen some data out of the Informa partnership in Europe as to what's been going on in the market there, not just last year, but also in the first half of this year. And the NVR report on the EMS 100s kind of making its way into the market. So we're seeing some data from there. From the data that you've been putting together, the book to bills, um, it still feels we're in a very insecure feeling stage in the market with respect to both EMS, but probably slightly worse in the printed circuit board sector, which is a sector that everybody's really keen to get as much investment back into and bring back to Europe and the US. That's kind of, they're kind of two counter positions at the moment. How are you seeing that?
Yeah, I think there are headwinds for PCB in both Europe and the US. And I think some of what's happening there is you have, companies have lost pricing power that they had in the aftermath of the pandemic, where they could raise their prices even as their costs went up. They could raise their prices
Mm.
and pass those on. And there was this period, of, call it, 18 to 24 months, where companies could raise prices and consumers were willing to pay those higher prices,
Yeah.
either because they had excess savings, they had excess funds to do that, or because it was something that they really wanted. A lot of those excess savings now are spent. Wage rates, which had been going up and were
Mm.
allowing, and not at first, but certainly wage rates caught up here in the US, so that workers were regaining some of that purchasing power. In that type of environment, if you've got wages rising faster than inflation, then you can afford to spend more on goods. A lot of that now has reversed. So wage growth is slowing. I think companies have lost the ability to pass on higher
Mm.
prices. And so they're getting squeezed, because we know material costs are still going up. And
Yeah.
and so you do go back to that mindset of, where can I cut costs. I can't cut it on labor because labor is tight. Wages are still going up. I'm losing workers. I need to retain these workers. Other material costs had been rising. Energy prices until, the last week had been elevated. Now
Yeah.
some of the, that is coming out of the market as concerns of a slower economy emerge, but those had been pushing up costs. And so I do think you have companies looking for other places to buy things like PCBs where they can get them from Asia at a lower price, and that gives a
Yeah.
little bit of breathing room in their pricing. Again, the data that we're publishing there is North America specific PCB and
Yeah.
EMS book to bill, and Europe obviously is doing the same. And so um, and then, some of these tech categories like consumer, some of the other segments have had a natural slowdown. So there's I think a number of factors contributing to that. But to me, a big one is certainly that companies are losing their pricing power, and so they're having to look at how do we lower costs.
Yeah, yeah. And when I look at the EMS companies, when I look at across the board at the dynamics of the EMS companies that did well in 2023, and those that did less well, and maybe that's carried on into 2024. If you look even in the top 10, you can see that the top 10 US headquartered companies, the Flex, Jabil, Sanmina, Celestica, all had a reasonably good year, all grew, and all were able to deliver decent returns. Where there was the most pain was probably with the large Asian companies, and particularly the very large ones. You look at a Foxconn that, went from, I guess, down about 25 billion, but from 222 or something like that, from a very high level. They're both exposed to the geopolitical shift if people are moving out of China, but also really exposed to the consumer market. So it's important where you are and what market you're serving at the moment, I guess.
Yeah, I think it's important where you are geographically, but I think it's also very important which, as you noted, which segments you're serving. And if you look at least the inflation data in the US that we saw last week, and we'll get more inflation data next week, you saw goods prices are declining. So,
Mm,
companies are seeing their prices come down, the selling price come down, while the input costs are going up, and you're going to get squeezed there, and you're going to have to figure out a way of either lowering your costs or doing
mm.
something differently. And so,
Yeah.
um, I think both of those factors are contributing.
Yeah, and we talked last time we met about this concern that we're addicted to cheap product, and that makes any shift in terms of the global footprint somewhat challenging, and potentially there's a generation coming through that might impact that. But I still think it's very, 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 very difficult to change minds in terms of pricing when we've had 3 decades of shifting to lower cost environments and chasing low cost labor around the world. So
Yeah.
that's going to take time.
And at the same time, I do think there are these long-term fundamental structural
Mm,
shifts that are in place.
yeah.
We definitely see the tariffs having an impact on, exports from China. We see Europe looking at more aggressive tariffs as well on China exports for things like EVs and other things. We talked about this in a little bit in the last episode. So that's a clear headwind for exports from China, and other countries are winning. If you look at
Yeah.
North America, Mexico's winning. Other places in Southeast Asia are winning. We are seeing a lot of investment in plants and facilities go into place throughout
Mm,
North America. So I do think you even see European companies investing
yeah.
in new facilities in the US. So
Yeah.
these are long-term, these, structural shifts that take time to come online, but I do think that is happening. Now, whether the whole electronics supply chain will follow that
Yeah.
remains to be seen, but certainly that's something that IPC is advocating for. We believe that it's something governments should look at
Yeah.
carefully, that they
Yeah.
should support, and that it obviously helps with building more resilient supply chains. So
Yeah.
some of these bigger structural shifts will take some time to come. In the meantime, you're left with, how do I produce the lowest price good, for the
Yeah.
market that I'm trying to serve?
Yeah, and some of that is the concept of having a low cost environment close by. It's cheaper to produce in Canada, it's cheaper to produce in Mexico, and there are trade relationships there that make that work well. In Europe, we've got all the Eastern European countries, and even North Africa, like Tunisia, is a growing region that's been very successful. And you're right, there ecosystemic changes that need to happen, and they take years. And just as it's taken years to cause the damage to the industry in those high cost environments, it will take years to repair that. Just switching gears a little bit, we talked a little bit at the beginning about politics. Watching US politics is an incredible show. It's like a really fast moving circus at the moment. We've got a new candidate in Kamala Harris for the Democrats. We've got a new vice president announced. Without digging into how you see that, what do those people need to do to let us know what their strategy is, what their industrial policy is? So when people are thinking about their votes that might be concerned about the manufacturing industry, they can make smart decisions.
Yeah, so I think that Kamala Harris and her team are still really building out their platforms. We haven't yet seen any really official releases of their, for example, industrial policy, or even some of their broader political ambitions and goals. Right now, it feels a lot like they're carrying on some of the what the Biden administration was striving for, some of the things that she was talking a lot about during her, her role as vice president.
Mm.
We should see some debates. There's still some discussion
Yeah.
about when and where
Yeah.
those will happen, but it does look like we will see some debates in September between President Trump and Kamala Harris. And so I do think that we will start to see a more clear view of their policies as it respects, as it relates to and um, manufacturing and other things. Obviously, some of the other topics that are popular in the US, whether it's, immigration or other things, those are being widely discussed. But
Yeah.
my hope is that with a debate in September, potentially multiple debates in September, we'll have a richer conversation about what some of those manufacturing policies might look like.
Yeah. And a vice presidential debate, does that matter, or is that just just I don't know, a beauty pageant?
Yeah, in the past, we probably would have said it doesn't matter too much. This year might be a little different. There's lots of
Mm.
things that have happened this year that weren't on my bingo card. Things I didn't think would happen. So uh, we'll see. I think we have what's interesting is we have two vice president presidential candidates that have similar backgrounds. They both speak to the Midwest audience, which will be an important audience
Mm.
for the election, but it's also an
Yeah.
important audience with respect to manufacturing.
Yeah.
And so I think you could see, their perspectives matter with respect to they're closer to some of those issues than their running mates are. They've
Yeah.
lived in those markets, they've served those constituents, coming from Minnesota and Ohio, and they speak to those Midwest values, but also the
Yeah.
Midwest workers. So I think
An
it
industry.
it
Yeah.
it could be an interesting discussion.
Yeah, it's certainly interesting from a point of view uh, of of where they sit, and as you say, those very important swing states. I think what's fascinating is what impact it has on the decisions that electronic manufacturers and particularly EMS companies are making with regard to investment. And there's always a bit of a hiatus in investment during a presidential election year. We seem to have had elections everywhere that's significant this year, which has made it even more challenging. When you speak to leadership of those companies, do they just want to know what's happening rather than saying, "Oh, I do hope it goes this way," or "I hope it goes this way"? They just want something that's settled and clear so they can actually plan their business within the framework that's provided to them.
I think that's right. I think, well, I think it's hard not to have personal
Yeah, of course.
personal desires in the U.S. these days.
Mm,
It's become such a bifurcated environment around politics, so you do tend to have strong feelings, it seems like. But I do think that CEOs and executive teams are looking for clarity. They're looking for transparency. And
mm,
especially when you think about some of these long-term projects, they've got lifespans of 30, 40, 50 years. In some
mm,
instances, you're going to wait and make sure you're really clear on what the policy environment is going to be like before you start to, dig up the ground and start to put up
mm.
a structure. Also,
Yeah.
they probably are looking for, is there the opportunity for financial support? Is there opportunity for stimulus? Is there
Mm,
opportunity? What might we see any, things from a new administration? We're going to end up with a new administration regardless,
yeah.
given who is running now. And
Mm,
so now maybe Kamala Harris retains some of the existing administration, but either way, you'll have a new president and a new vice president, and they'll bring with them, their teams and their policies. So I do think that we're waiting for some of that. Recent volatility in the marketplace doesn't help. So, and again, I think that is going to last through at least the first part of November when we have the election. And so at this point, I think it makes a lot of sense to wait. You also
yeah.
hope that by then the Fed has cut interest rates. That's widely expected. The market certainly is expecting
Pricing
aggressive
for it.
cuts through the remainder of the year, and so maybe the cost of financing gets a little easier. Maybe the availability of financing gets a little easier. This week we saw the senior loan officer results, and credit is still tight for commercial and industrial projects. And so maybe that gets a little bit better after November, after the Fed has had a few meetings. And so
Yeah.
I think companies are waiting for that.
Yeah, those Fed meetings are certainly important, and they kind of give an indication to whether we really believe that inflation has been beaten and we are pushing that risk of recession away. By the way, that bifurcation of politics is true everywhere in the world at the moment.
Yeah.
That seems to have amplified over the last decade quite substantially, which is in many ways not a good thing and a concerning thing. But I think when I look at the EMS industry, the PCB industry, and all those that supply the industry, what they like is to be able to plan, and the only way they can plan is if they see stability out there in the market. And what they see at the moment is volatility, and a milestone like the US presidential election kind of perhaps moves us from a more volatile to a less volatile point. So that bodes well.
Yeah, and
Ending on a,
we also saw Intel announce major layoffs.
yeah,
So
yeah,
even taking politics out of it, you see a company with the legacy of Intel and with the importance of Intel announcing major layoffs,
yeah,
and that does cause some hesitation. That causes other
yeah,
companies to say, "Oh, what do they know that we don't know? What are they feeling that we might be feeling?" So there is a prudence that sets in around, let's take a little bit more of a wait and see
yeah,
and make sure that this doesn't ripple into us.
yeah. Who'd have thought Nvidia would be worth something like 20x Intel?
Yeah.
It's absolute insanity, isn't it? It just goes to show you the volatility of the market and what's happening out there.
Yeah, and how the market
Interesting time.
changes, how the
Yeah,
demand for technology shifts, and so
yeah,
in
yeah,
Nvidia obviously has been very well positioned to take
yeah.
advantage of the shift to AI in particular.
Yeah, that seems to have helped them. Yeah, and ending on a positive point, I think that really tells us that the fundamentals of the electronics industry, what's really going on in terms of the long-term demand for electronics is all good. There are no genuine concerns there. There's nobody saying, hey, we're going to do this with something that isn't electronics in the future. It is, it seems to be a solid sector with a nice growth that beats GDP growth year on year. So yeah, pretty robust. Shawn, thank you as always. Absolute pleasure to chat. Look forward to doing again soon in a month or so when we've got some more numbers and I'm sure some more political news and so forth. But thanks for your time today. Thank you.
Yeah, great to join you. Obviously, the world is going to be drastically different in a month if the last month is any indication of how quickly things are changing. So I look forward to our next conversation.